Good morning, traders. Hopefully, I will not cough through this entire session again. I think that it is somewhat under control. If you've been following my saga, I have been dealing with something. Flu, COVID, cold, I don't know. But I think that I am out the other side now. Anyway, we had some news this morning that sent things reeling upwards. Let me remind myself what that was. That was unemployment claims, and they were up higher, which is bad for the economy, but good for the markets because that may temper the Fed from increasing interest rates at such an aggressive rate. And the last 2 days of congressional testimony by Powell and others that kind of drove things down because it made it clear that the Fed intends to aggressively increase rates until they start to see some activity in lowering inflation. And unfortunately, to lower inflation, that means unemployment has to increase and business in general has to slow down, so they'll have to lower their prices, presumably, I guess. So anyway, but that unemployment number that came out at 8:30 Eastern gave us quite a big run up, as you can look at the 15-minute and the 5-minute show most dramatically. And we just sort of been sticking up at this end of the range here. Up on the day, about 5 points, but we'll see what happens. I don't know what the trading is going to look like. I mean, there's a lot of good reason not to even trade this week. Tomorrow is non-farm payrolls, I believe, so I don't know if things are going to act in anything close to a predictable way today, but we will see. Got about 5 minutes until this market opens. And we'll just stand by and wait for it to happen. Yesterday was a good day. I think I was up a little over $800 over a multiple of my accounts. No single one was more than 150 or 200 bucks, but I kind of rotated through them for a couple things. I want to obviously increase the balances in all of the accounts, both PA and eval, but at the same time, I don't want to put any single account at risk of failure. I have run into that in the past with this damn trade copier where I just trade everything together, figuring, well, all I have to do is make 50 or 100 bucks per account, and that'll be $500 or $1,000 a day, and blah, blah, blah. And that works fine until you run into a black swan, and then all of a sudden you've lost all your accounts at the same time. So this way, I never, at least these days, until I have a massive balance in these things, I don't want to put any single account at risk. And of course you could say, well, just put a stop limit and blah 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 blah, but the problem is that y'all know that doesn't always work. You can easily get caught up in a meltdown, and you just are revenge trading, and you are just doing anything you can to save the accounts, and then at some point you're like, oh, screw it, we'll just do a Hail Mary. We're either going to win or it's going to lose, and it's very easy to go on tilt. So with that in mind, I never put more than one or two of my accounts at risk in a given moment, because I'd rather go on tilt and blow up one account than 10 accounts, which is what I have. Anyway, we're opening up in about 3 minutes here, 2.5 minutes. took a couple tiny little trades that I ended up having to just break out even on because once we got to the top of this thing, I thought maybe a pullback would result in a better run up, but I ended up just jumping out of those trades break even. I think on just one eval account, I took three trades and basically got out with one tick on each one of them just to break even, which after commissions results in about, I don't know, what is it, $8 or something per trade. So it was about $24 or something like that, if I recall. Basically flat on those, and those were more just screwing around with after the numbers came out. I just fooled around with one of my least important eval accounts and didn't get into trouble, but decided I did not see it moving to the upside. And you can see after that big move, it has been just sort of melting right now. I'm interested in a trade somewhere in the around 87.75. Where's that? 87.75. Somewhere's in here I'd be interested in a long. Why, you ask? Because that is a big old gap on the 5-minute chart. That's here, right here. So you see that, do I have a rectangle tool here? No, but I'll use this. Here's your gap right here. So the middle of that is right around there, 87.50, 87.75. So I'll pull back into that area. Could be interesting. Maybe we could even look at even a little more of a premium by going in around where these tops are at. You can see that there is some reason to believe that that would be a good rejection point. So we can throw a line in there. Markets are open. So what was I saying? Oh yeah, right here. Something like that maybe. What is that? That is 86. So perhaps a long at or around 86 would be intriguing if we got all the way down there. I mean, we've got all kinds of gaps on the 1 minute, but there's so many of them that I have no idea which ones would respond properly. So we're right at a gap on the 15, which is interesting. That's at 4,001. This is the 15 here. And this gap right there. And that does line up with gaps on the 1 and 5 minute too. And if it weren't so early, I might be inclined to mess around with that one. Maybe take it on the 5 minute, which would be at 407.5, something like that. One minute would bring us to about 4,000, so that's a big round number. So you could consider a long right there, but you can see it is breaking down. This 4,000 is there. So if we tried to get just a point, like say 1.25, that would have paid. Yeah, you would have got a point out of that. You have to be kind of patient on these. I used to just put my limit order right at where I was interested in and didn't wait for a rejection. And I mean, it does all right, but I think that your probabilities are higher if you wait to see how this wick through and then put your order and wait for it to wick back up. Where are we at now? We're still climbing. That's 2 3/4. So our 5-point mark would be up there. This was a gap on, yeah, that's nice. The 5, the 15, and the 1, the 5, and the 15-minute charts. And those tend to be pretty effective. And that big round number of 4,000 also kind of helped. So, the trade would have been wait for it to wick through, put your order here, and let it pull back through it. And if you did that, you had zero drawdown on that trade. And we're well over 5 points now. And we're at almost 7 points now. Look at it. Oh my God. Why didn't I take that trade? That should be the name of this channel. Instead of Journey into the Future, it should be why didn't I take that trade? The other name could be why did I take that trade? Let's see. These are the highs. Man, oh Manischewitz. That's 10 points if it makes it up to that pivot point up here. It'll be over 10. That pivot point is 10.5 points. It's getting stuck up here at the high of the day, though. I'll start trading like, what's his name, Patrick Wieland, where then I'll bring up a chart from nowhere and like, oh yeah, I've been in since 4,000. That's a great way to run a channel where you just you create trades off screen, and then when the ones that work you bring up screen up onto the live stream, and the ones that don't work out they never happened. Let's see here. I would think that we would make it up to that pivot point, but who knows? That is a gap here on the 1 minute. Doesn't look like that is going to hold, but maybe we need to get to there to get a point. Here we go. So you got your point. There you go. So that was a point off of this gap. And that's what I'm talking about. I watch everybody's streams and YouTube channels, and that guy Bob Anderson has this trade where this yellow is the 9 EMA, so he'll wait for this pullback. He'll have a run up, pull back to the 9 EMA, and then he would go long above this bar here. But the more I study these gaps, the more I think that that's all a bunch of bullshit. And not that his strategy doesn't work, but it's not for the reasons that he thinks. And does that matter? I don't know. And could I be wrong? Of course. But there was his trade, and he would not even be in this trade yet, and he's looking for 5 points above this. Just way the hell up there. But if he would have played the gap instead, now you're in here, so your 5 points is lower. But more importantly, that you would have actually gotten something out of this already. I mean, even if you're playing for 3 points, I don't think you quite would have got filled on 3, but I mean, you got to decide. I mean, you can all day long be playing this thing for 1 or 2 points for sure. There's 2 points. I mean, that's $100 a pop. And as it turns out, this thing is going, baby. That's 5 points. And didn't quite make the 5. But that was only 5 if you got in at the gap. His method would have got you in up here. That's all I'm saying. It's just a theory that the moving averages are not really great for. Wow, that thing really rejected, boy. And then there's where it rejected, right at the pivot point. So that probably would have been where you'd want to get out a tick or two before the pivot point. He might not have even taken that trade. He likes to say, well, look to the left. And, then he's got these highs here, but don't know. That was strictly a 1 minute gap. That didn't coincide with any other gaps. So what I'm getting at is, no matter what your strategy is, it seems like paying more attention to these gaps can enhance it. Because even if you're looking at your traditional two-legged pullbacks, if you can get not every two-legged pullback works, obviously. So if you can further refine it with some of this gap theory, maybe your percentage goes up. I don't know. And by the way, Apex has extended their 80% off sale. So if you are inclined to open up an account with them, I'd appreciate you if you used my code here. Sends a little something back my way without affecting you in any way financially. So that's all I have to say about it. Except that it's at apextraderfunding.com. I hope. All right, what else are we looking at here? See, it's still rejecting that that gap here. The gap on the 15-minute is at 4,001. Way down here. That also coincides with a 5-minute gap. And not quite the 1 minute. It's above the 1 minute gap. That was this gap right here, this blue one. Okay, so what I was saying about incorporating these gaps with other strategies. So here's an old chart here. And here's some two-legged pullbacks. Like here's one here. These are actually below the 20. This one's kind of far from the 20. Let's see. Something here maybe. Okay, so here's a gap right here, for instance. Yeah, it doesn't really line up with any two-legged pullbacks that I can see here. Anyway, so that's just something that remains to be looked into, or just abandon all of the damn theories that or strategies that pertain to moving averages. Although I have to admit, I've been trading these moving averages so long that I can't even look at a chart without them. So I may have to wean myself off of them, like go from the highest down to the lowest. I mean, is there a person that trades on this planet that doesn't use the 2021 EMA? I mean, I don't know that. Even the guys that claim to have naked charts are like, oh, I just have the 21 on there just for reference. Like, I don't know what that means. All right, so now are we going to actually take any trades today? We're running into a big old gap from somewhere, but it's like it's resistance, not support. And that's dating back to yesterday morning. Yeah, there's which you'd sort of expect since we had a big run up that we would have to be dealing with yesterday's gaps. I think that's the part that is most intriguing about all price action is how far these algos, I mean, it makes sense. I mean, if it can keep track of gaps and liquidity and volume holes and all this kind of stuff dating back years if it wanted to, I suppose. But that gap is way up at 21. Let's see. The encroachment is at about 21. That's somewhere up in here, so that's shy of that pivot point, but we've got a ways to go before we get there. Let's see here. There's a gap right here. There's tons of gaps here. So when you get all these stacked up, then they're not as useful to me, at least, because you just don't know. I mean, I guess just to be conservative, you could wait for it to pass through these all the way to like to your lowest one, and you may just miss it. Yeah, because I'm looking at the off screen, I'm looking at the 2000 tick chart, and right now there's a gap that lines up right with the 21 EMA. So if that turns out to be a second entry long, was it the second entry that would cause the reversal, or is it that gap? That's what I'm hoping to learn over time. $21.75 looks like a pretty good place for resistance right there. That almost lines up with this pivot, so I probably would be inclined to wait for it to get through the pivot and then maybe catch it on the way back. was going to take that trade long, but I was hoping it was going to pull back below the midpoint a little bit before I took it. A little too conservative on that one. Yeah, we got our point off of that. Yeah, it does look like she wants to continue on up. So one thing that has occurred to me, you can either go ahead and just scalp all these for 1 or 2 points. Not all these, but the ones that make sense to you for 1 or 2 points. Or you can just keep these stops like super tight, 1 or 2 points. And as soon as it starts to move in your direction, go to break even. And you'll have a ton of break even trades, but then you're waiting for the breakout one. And those will be most likely to be gotten, like if you look on the 5-minute chart here, when you get all this consolidation, well, clearly that's a build up it's a build up by the algos to either take it up or down. So you could assume, based on price action from the past, I have to look back to the chart to see where this came from, but typically when they start building up like this, that's a sign to, especially if you're at a very low point of the day, that's a sign that they're getting ready to take that thing up. So you get a hold of this and just sit on it all day. Now, if you're on your eval accounts, that's not going to work very well on, say, Apex because of the trailing drawdown. So, you take it all the way up to here. You can't let it pull back on you, 100 points, because you're going to blow your account, because that you've got a trailing drawdown. So it's kind of like a high water mark. So you have to make your exits strategic, because you can't let it turn back against you. Now, if you're on other companies like Top Step and things like that, they have an end of day drawdown. That would work better, because it's not your total drawdown for the day is say 2,500, as opposed to it following you up. I always think I'm not explaining that well, but there's other sources to. All right, so now we're continuing to pull back, so we might be interested in, say, this one here. There's a little gap at 11.5 on the 5-minute. I'm gonna get rid of this gap here. I think we're done with it, or at least I wouldn't be interested in taking a trade off of it anymore. Off screen, I leave all of these gaps, but it is really, really cluttered. It's not gonna look good on the stream, so I'm just drawing out the ones that I consider to be important or useful, or the ones that coincide with the other time frames. So you see here, when this is on the 5-minute chart here, when it first came into this gap on the 5-minute, it was right at the 21 EMA. I think this thing's going to consolidate and start heading down. I'm trying to decide whether I'd be interested in trying to scalp a point off of this gap right here. Seems like the market was looking for any reason it could find to go up today after the last 2 days of drawdown, and that unemployment number apparently did the trick. Although we're only up about less than 0.5% here on the day, so it's not like we've gone crazy. I don't see a lot keeping us from going to a new high here. Except the algos. Other than that, I don't see anything blocking us. Things look like they were going to be very eventful after that unemployment number came out, and now we're just kind of drifting around, aren't we? Little gap right here. would almost be inclined to take a long and ride this thing all the way up into the 20s. Other than this high of the day, I don't see anything in the way. Then again, that would have been a huge mistake. Man, look at that. That's semi-terrifying. Jeez. It's already a 7-point move right there. So now we're coming down into this gap here. Look at that, almost to the tick of that encroachment, consequent encroachment. Well, this appears to be a change of structure. Got a lower high here, and a lower low here. 2000 tick chart is showing 12.5 as resistance. Might be inclined to take a short right here on the return through it. At this point, just trying to get a trade in, even if it's for $50. She is dumping now. bounced right off of that gap for a few points. 2.5 points, something like that. $4,004.5 is a gap on the 5 minute, and it's at this 100 EMA. I think that's 100. Yeah, 105 EMA. The problem with that is there's a ton of gaps on the 5 minute in that area. All the way down to like 4,000. Man, that took a dump, huh? Get rid of some of these lines here. A big, kind of a big gap right here. Appears that that's what it's reacting to. So I'm gonna take this thing down now, or just a fake out? Looks pretty damn heavy to me. This is VWAP right here. And I think this is the 200. Yep. This is 200 EMA. This is VWAP here. VWAP at 4001. The 200 is at 3999.25. So yeah, 4000 is definitely going to be some resistance, but you'd think that we're going to go down there at least test it, right? really feel like I should be in this thing short right now. Just so chopping right here. This blue box is a gap right here. And it's on a bearish bar. So you'd be inclined to take that short at about 4,004. But I mean, look at all these wicks here. Well, they've just turned off the works here, haven't they? Just doing a whole lot of nothing. Actually, didn't mean to get into that trade there. I was fooling around with the DOM on the other screen and I accidentally entered this. I better get out of this. All right, screw that. We're out of that trade. I don't know, man. This price action is goofy. The gap on the 5-minute right here, that may be interesting right there. So short at 4,008.75 maybe. Like this is acting so goofy today. I'm surprised. I'm hesitant to even participate. Just watching this, we just missed this move. Oh, I'm getting tired of this whole market today. Let's see if we can get a pullback to around 10 and then get in on this, but it looks like it's leaving without us. Oh boy. All right. So, yeah, we'll see. There's a little volume gap right there. Might come back and fill that right in there. Oh, there it is. Filled it. Let's try to get in at around 10. See if we can get some points out of that. And maybe we'll see if we can get a push up to the highs again. We'll see. Still looking for perhaps a pullback to around 4,010 for a long. The other option would be is if it breaks out. We're in the middle of a big 1 minute gap from back here. So if it breaks out of that, maybe there's a gap right there. Right now, what I'm kind of interested in is somewhere's in here. Pull back to here. That lines up well with this pivot point and the 21 EMA. But it is just ranging right here. Thought we might get that pullback, and it just right back into the barcodes. All right, I think that's it for today. We'll try again tomorrow. We'll see what happens. We're going to keep playing around with these fair value gaps and whatnot. And maybe tomorrow we'll actually take a trade. All right, guys, I will see you tomorrow. Thanks for tuning in. If you get a chance, go ahead and hit that like button or subscribe to the channel and hit that bell icon if you want to get notified when I go live again. Also, take a look at Apex Trader Funding and use my code for an 80% discount. Talk to you tomorrow.